Here's your stock market review for today, where things were all quiet until things got ugly. The stock sold off, the S&P almost pushing down 1.5%, the biggest drop since mid-September, on nothing. There was no news announcement, there was no statements from Federal Reserve. Bond yields actually fell, but that's more flight to quality than anything. It was merely profit taking and selling that pushed things into hitting stop losses. So all the gains that we saw in the stock market over the past week or so have just been evaporated. I have put call ratios. I want to show you the VIX and a few other things in your stock market review for today. Let's jump in. If you're just joining me for the stock market review, I do a stock market review every day after market hours where I break down what happened during the day. If this is your first time finding me, make sure to hit that like and follow button. And as you can see from this Dow Jones Newswire headline, S&P lost about 1.5%. We do have data coming in tomorrow. Expectations are that it's rather benign that we see CPI or PCE, inflation deflator, continually moving lower. However, as I pointed out in some of my other stock market reviews, the rate that PCE inflation is declining. We're seeing lower and lower numbers, but the numbers are moving lower, slower. So if housing continues to move higher, which we have seen housing prices starting to move back upward, that could spark more inflation, and the Federal Reserve may not be able to cut those three rates that they are speaking of in 2024. Here is a look at the S&P 500, and pretty much all day it was a quiet day. It wasn't until now, if you look at the hours down below, everything started off right around probably about 11:30 my time. I'm in Mountain Time, Santa Fe, New Mexico. It got pretty ugly all the way to 2 o'clock, a little bit of bounce thereafter. The S&P 500, of course, this index losing almost 1.5% for the day. Here's a look at SPY stock versus QQQ. Now, I like to look at these because QQQ, I just put in the stock market review yesterday, I broke down QQQ, where I looked at the NASDAQ 100 and asked the question, forward EPS, where are things given prices yesterday? Yield was about 4%. So it was a sort of buying opportunity when you consider your alternate investment, which of course is the benchmark 10-year Treasury. The nice thing about the NASDAQ 100, of course, is you're spread out over 100 stocks. Now, I didn't exactly recommend buying into the NASDAQ yesterday. I certainly wouldn't have. But given today's move lower by 1%, this means that the yield that you would get, considering if we get the same earnings per share throughout 2024 for NASDAQ, that yield has just improved with the big drop lower. We still have tomorrow's PCE inflation deflator. Again, I expect the number to move downward. Probably not as much as people are hoping, but still downward. Put call ratio. The number of people who are buying puts versus calls. And as you can see, the calls were winning as of the past couple of days. Put call ratio is actually pretty low. And I did see a little news blurb, and I think it was in that Dow Jones article that I posted earlier, that people are buying more puts. Well, not exactly according to this. We did see a drop lower at the beginning of the day, then a big rush towards the end of the day in the put-call ratio. Now, what does the put-call ratio tell us? The number of puts purchased versus the number of calls. It's an overall ratio. If you kind of put a straight line over to this, now keep in mind, this encompasses October. This is the 2-hour chart. So historically, the numbers are quite different, but over the past couple weeks, from mid-October, as you can see, there was a big spike in the put-call ratio. These numbers are pretty benign. So I don't know exactly where that statement came from in that Dow Jones Newswire statement. I looked at it and I said, okay, I'll look at the put-call ratio. I do anyway. And I wanted to see, because earlier in the day when I ran through everything, the market was moving higher. Volatility index. This is the next thing. As an options trader, this is what I live and breathe by. I do watch the put-call ratio. That put-call ratio that I just showed you earlier was on indices and equities. This is the VIX, which trades off the S&P 500. The VIX gives us an idea the valuation of the puts that are being purchased. The VIX spiked. But I think this is pretty much done. Waiting for tomorrow's report. I may step in and sell some calls on, say, UVXY or one of those other ETFs versus the VIX. The nice thing about those are we're looking at a 1 week real quiet period with Monday being a holiday and then the following Monday being a holiday. But if I get that expiration date next week or even the week after, I'll probably see a lot of calm market activity in between the two major holidays. This spike, this chart goes all the way back to, of course, October. No one is expecting the equities to move much lower. So I have a tough time thinking that we're going to see a big spike upward where this chart is sitting. We may see a little bit of movement upward tomorrow, and that's probably when I'm going to step in and sell some calls. I'll probably do a credit spread where I sell the near-term calls and buy calls at a higher level to protect myself. US 10-year Treasury yield, flight to quality. This was the learning lesson from the 1987 stock market crash that when you get out of equities, because they're selling off quickly, you rush into US Treasuries, the safe haven for US markets. And because of that, that pushed the US 10-year yield lower. This could easily reverse itself if this trade was based upon flight to quality. There were no statements. No one made anything in it. And if anybody was going to say, well, listen, bond yields have been pushing the markets. Yes, but bond yields, this is the Treasury yield on the 10-year, your benchmark investment grade. It went lower, which theoretically, if there is a 1-to-1 ratio, equities would have went higher. But this was flight to quality. So we'll probably see this rebound back upward. I may step in and sell some calls on some of the ETFs against the Treasury yields. US dollar index, another flight to quality. If there's any kind of issues throughout the world, you dump your currency, you rush into the US dollar, then buy those Treasury yields. Flight to quality. In order to get those Treasury yields, if you're running out of Japan or Europe or Great Britain, wherever that host country is, your ticket in is the US dollar, and this would push up the dollar. Dollar did pop up a little bit. WTI oil kind of pumped the brakes a little bit. We have been moving a little bit higher. I've been expecting moves like this. I do expect OPEC to step in at some point and say, listen, supplies are exceeding demand. We're cutting production levels, and that should push WTI oil upward. We'll see how that plays out. Finally, spot gold. Spot gold kind of settled down a little bit. It really wouldn't have much of an effect. You wouldn't really rush into gold per se on a flight to quality. In fact, just the opposite, you might sell it. We did see a little bit move lower in gold, not much. Didn't really move too much. But I wanted to break this down for your stock market review, show you the put to call ratio because that is important. It's not nearly as high as I think people thought could be. We'll see it probably move up tomorrow a little bit, then sell off. Same thing with the VIX. Anybody that missed the opportunity now are probably sitting there saying, wow, I better buy puts, and they'll do so tomorrow. We've got the PCE inflation deflator hitting tomorrow morning. From there, I expect relatively calm, but we'll see what that PCE inflation deflator actually prints. If it's an ugly number, today's move downward in the S&P 500 will look pretty. Make sure to hit the like and follow button for your stock market review. I do it every day. See you in the next video.